Hey guys, this Crypto she does it a little bit of everything from CoinDesk. I have a feeling that some people want to blame crypto for the failure of those banks. So it says, stop blaming crypto for traditional finance failures after the recent collapse of three banks, Silicon Valley Bank, Silvergate Bank, and Signature Bank. Many pointed fingers at crypto as the cause. But crypto may actually be the solution, not the problem. Amen to that. Amen to that, yeah. Amen to that. Recent news has been dominated by the collapse of several banks, including Silicon Valley Bank, Silvergate, and Signature Bank, all of which provided vital services to the crypto industry by bridging the gap between blockchain technology and traditional finance. However, some media outlets are quick to blame the crypto industry for three financial disasters. Is this fair, or are traditional financial institutions failing us again? Many crypto advocates argue that blockchain technology offers a solution to the issues pledging traditional finance, and it isn't the problem. Silicon Valley Bank, the 16th largest bank globally with $210 billion in deposit, recently experienced a devastating collapse that impacted the global financial system. As a leading provider of banking services to nearly half of the United States, venture capital-backed technology and life science companies, and over 2,500 ventures capital firms, the bank's downfall had a significant effect on the technology and financial sectors. The collapse can be traced back to the bank's investment strategy, which involved placing a substantial portion of its funds into treasuries. As interest rates rose, the value of lower yielding treasury bonds declined, with new issues offering higher interest rate entering the market. Holding these bonds to maturity would usually have mitigated the impact of interest rate fluctuation. However, the situation worsened when depositors began withdrawing their funds en masse. On March 8, Silicon Valley Bank publicly revealed its losses, leading to a massive sell-off of its stocks on March 9. The bank attempted to raise $2 billion in capital to stabilize its financial position, but this move was met with skepticisms, fueling further panic among depositors. A bank run ensured, forcing the bank to liquidate its treasury holdings at a steep discount, exacerbating its loss. Ultimately, the situation spiraled out of control, and the Federal Deposit Insurance Corporation (FDIC) had to step in to take over the bank. The FDIC's intervention is thought to be necessary to prevent further damage to the financial system and to protect depositors' funds. This is crazy, yeah. There are a number of ways this situation affects the crypto industry negatively overall, including the following. Number one, loss of banking services. Crypto companies and startups that relied on Silicon Valley's bank service now face operational disruptions and financial challenges as they scramble to find alternative banking partners. Number two, reserve and instability in liquidity. The collapse of SVB sent worries through the industry, as the bank was revealed to have held reserves for the USDC stablecoin. Other crypto companies, including Ripple, also had announced exposure to the bank. Number three, reduce investors' confidence. The collapse has raised questions about the stability and the sustainability of the crypto ecosystem, which may lead to decreased investment and slower growth in the sector. Number 4, increased regulatory scrutiny. The failure of a major bank involved in the crypto industry is likely to prompt regulators to push for stricter regulations to protect investors and maintain financial stability. Number 5, short-term price volatility. The collapse has caused temporary fluctuation in the price of cryptocurrencies because panic selling and uncertainty around the implications of the collapse affect the broader industry. It is true. Accelerated crypto adoption. Bank failure can expose the vulnerabilities of traditional centralized financial system, prompting individuals and businesses to explore alternative solutions. The shortcoming of these systems, such as single points of failure, inefficiencies, and the potential for the mismanagement, can encourage more people to turn to decentralized financial systems like blockchain and cryptocurrencies, which offer increased security, transparency, and autonomy. Woohoo! As traditional financial institutions falter, blockchain technology and cryptocurrencies can emerge as more liable and secure alternatives, building trust among users. The transparency, immutability, and consensus mechanisms in blockchain technology can foster a higher level of confidence in the data and transactions recorded on the network. In times of financial instability, individuals and businesses may also view cryptocurrencies, particularly those with limited supplies and strong fundamentals, as a hedge against traditional financial risks, driving up demand and potential accelerating options. I like that. Bank failures can also serve as a catalyst for innovation, creating demand for better financial solutions. Entrepreneurs and developers may seize this opportunity to create new blockchain-based financial products and services that addresses the shortcoming of traditional banking system. This can include innovations in cross-border payments, lending, and assets management. Moreover, bank failures may disrupt cross-border transactions, making it more challenging for businesses to make payments or transfers funds internationally. Blockchain and cryptocurrencies can offer faster, cheaper, and more secure cross-border transactions, making them an attractive alternative for businesses dealing with international partners. I like that. Finally, the collapse of traditional financial institutions may prompt regulators to scrutinize financial system more closely, potentially leading to clear regulations and guidelines for blockchain and cryptocurrencies. Regulatory clarity can encourage more businesses and individuals to adopt these technologies as they can better understand the risks and the benefits involved. Blockchain may actually be the solution. The solution with Silicon Valley Bank has exposed the vulnerabilities and the shortcomings of traditional banking system. However, blockchain technology holds the potential to revolutionize the financial sector by addressing these long-standing issues. Far from being the problem as printed to in the media, blockchain emerges as a solution, providing a decentralized, secure, and transparent financial system. Woohoo! I think this is the last part. And capacity to foster trust, prevent fraud, and facilitate efficient transaction, establish it as a viable alternative to centralized banking by capitalizing on blockchain's inherent strength. The financial sector can surmount vulnerabilities, inefficiencies, and mismanagement, ultimately paving the way for a more resilient, innovative, and clean financial ecosystem. As we learned from the Silicon Valley Bank collapse, it's crucial for the financial industry to adapt and embrace blockchain technology to prevent similar crises in the future. By leveraging the unique advantage of blockchain, we can create a more robust and reliable financial infrastructure that benefits businesses, individuals, and the global ecosystem as a whole. Boo! Stop blaming crypto for the disaster. I like this one. Let me know how you feel. Subscribe. Bye.